Hey, welcome back to The Dive. Today on the show, we have Frank Holmes from US Global Investors back on to chat with us. But before we get into it, don't forget to give us a quick subscribe. Hey Frank, welcome back to The Dive.
It's great to be back with you, Cassandra.
Great to have you back. Okay, so Elon has created some waves with this talk about energy consumption. What is your take on the energy debate over Bitcoin?
Well, first of all, he should stop selling cars in most of the U.S. States because the majority of them use coal to generate electricity. So he's a bigger user of this bad energy he talks about. When you look at the math, it's really greatly exaggerated. And what you really find out is that there are bad countries that use a lot of coal: Kazakhstan, China, Inner Mongolia. But the majority of North American things that we use is green energy, or it's near a natural gas facility, and it's recyclable, it's renewable energy. So his data points are greatly mismanaged.
A big area of concern being talked about right now is the regulatory risk. How are you viewing it?
Well, there's always a regulatory risk anywhere. In all our mutual funds, we say that we believe, as our investment philosophy, that government policies are a precursor to change. And that is why we monitor both monetary and fiscal policy. Fiscal policy is simple. It's a binomial model. It's taxes and regulations. So anything that increases regulations is a tax on the system, and deregulation removes it. So we had record IPOs in the past year in the US and so far this year, a lot because of deregulation by the former president. It's really, to me, easy to watch. So regulation is a boogeyman for in the capital markets today. They want to have a tracking of anything over $10,000 worth of coins. So we'll see how that unfolds.
So Hive appears to be mostly in Ethereum with some Bitcoin. Do you have a preference towards Ethereum?
I do, because as a hodler, I made much more money for our shareholders owning Ethereum. In the past year, before this correction, it was really simple. Bitcoin was up 800% and Ethereum was up 1,600%. The same thing last year. I just saw Riot's numbers come out, their revenue, and our numbers aren't published, but our hashing power is basically, but we beat them. And I think a lot because we have about an exahash of Ethereum production if you convert to Bitcoin, but in fact, our production margins are greater.
So gold appears to be catching a bid. What do you view as the key price levels on gold?
Well, gold went above its 200-day moving average this past 10 days, and that's very important for psychological confidence that trend is your friend. But gold's not going away. And I think it's greatly understated. I did a short video clip on this months ago. The CPI number is like fake news. It excludes the cost of energy for the gas pump. It excludes the cost of food. And both are just ripping and roaring away at double-digit numbers. So I think that if you use those and you embedded those into what the CPI number used to be, then you would have inflation running right now 12%. And so I think at a 10-year government bond with 1.7%, the negative yield's the greatest ever. Gold should be at least 4,000. And I think it's in that trend going back up the reset.
So what kind of gold companies do you favor at this stage, given your outlook? Do you like the explorers, royalty companies, or large producers?
I've always had a bias for royalty companies because they are able to generate, like Hive does, massive revenue per employee, which is an important, they call the efficiency ratio. When we talk about Hive, we're doing about $15 million of revenue approximately per employee. When you turn around and look at Franco-Nevada, it's $25 million of revenue per employee. I mean, that's remarkable. And so the royalty companies and Wheaton, they've outperformed Berkshire Hathaway, Mr. Negative, in his empire over the past 1, 3, 5, 10 years. So I think I love the royalty companies. I love companies that really respect revenue per share growth and cash flow and free cash flow. And they're just great performers.
Okay, Frank, so one last question we need to sneak in there. We know you run the JETS ETF, and we're hearing more talk about the revenge vacation. What's your outlook on the airline industry over the next year?
Well, we've had a spectacular run. Jets fell from 34 down to 12 and then ran back up to 28. It's corrected here because of Europe and Canada still sort of thawing out of their winter season. Some still scares in India, negative narration. But as more people become vaccinated, then we're going to see jets go through, I believe, another level. The airlines, and in particular, is tourism. People want to travel. And they're dropping the age of vaccines in Texas and Florida. So you're seeing there's a big crypto conference taking place in early June in Miami. 7,000 people, $700 a person, supposedly sold out. So I think that people are pent up to go enjoy the sun and be able to go and mingle again, especially if they've been vaccinated. And you know what I'd like to share with you is it's really important, the DNA of volatility. So on a daily basis, as a non-event for gold to go up or down 1%, 70% of the time, stock market's 2%, gold's more stable, but Bitcoin and Ethereum is plus or minus 5%. A Tesla is 5%. Now, when you look at the DNA of volatility over 60 trading days, it's a non-event for Bitcoin and Ethereum to go up or down 50%. Well, it went up 100%. So therefore, math says it corrected. That's all it's done. And it happens quickly. It's just people got blown out by these crypto exchanges that allowed people to leverage 20 to 1. That meant a 5% move. 5 times 20 is 100. So a 5% move, they're wiped out. So you had this tremendous wipeout yesterday. And I think now we get that bounce taking place. I remain buy them on the dips.
Yeah, buy the dip. All right. Thank you so much, Frank. We'll see you next time.
Happy investing.
Thanks for tuning in. We'll see you next time. And in the meantime, don't forget to like, subscribe, and share.